Yeah, so Bharat is here. So we can start with the call. Dear investors uh, and partners, good evening to all of you. My name is Nimesh Mehta, and on behalf of ASK Investment Managers family, I welcome you to this quarterly webinar with Mr. Bharat Shah, Executive Director of the ASK Group. As you all know, on the first Friday of each quarter, we schedule this hour for this webinar where Bharat will share his initial comments on the macros and markets in the first 15-20 minutes. And the next 45 to 50 minutes, he'll try and answer all your questions. So request all of you, as I think Mr. Jacob has already started typing questions, request you all to start typing your questions in the chat box. And as a moderator for this webinar, I will curate and ask the question on behalf of you to Bharat Bhai. So Bharat Bhai, the floor is yours. If it's okay to just share your opening comments, and then maybe we'll take up questions as it comes.
Yeah, good afternoon to everybody. So Nimesh, what do you want me to cover in the initial phase? And then I suppose there'll be question answers, right?
Yeah, so more time for question and answers, but broadly your thoughts on the last 90 days. Anything in the macro you think people need to, because these are all investors with us and partners who with us. There's not anybody new here. So they are familiar with you. They're familiar with the strategy. They would like to know anything which we should know on the macros in the last 90 days or something. And your broad thoughts on the equity markets, and then you zoom down into question and answers, if that's perfect.
No, so macros don't alter dramatically in 90 days, though at times events do happen, like February 22, when the war broke out between Russia and Ukraine. But nothing so specific in 90 days. So, but let me keep my broad comments on the picture, and then we can leave the dialogue open for question answers. But as I mentioned it umpteen number of times, as I mentioned umpteen number of times, we are at a cusp of one of the greatest phases of growth and evolution for this country, for our GDP, in turn for many entrepreneurial and other high quality businesses that are there to benefit from these relentless growth. In turn, that will reflect into the value of these businesses, and eventually it has to reflect into the outcome in the form of value creation for the portfolios in the hands of patient and long-term disciplined investors. As I mentioned many times, which I suppose most of the people on the call probably would have heard, but those who probably have not, I believe this growth is not short-term. It is huge and long-term. It is not shallow. It is really, really large. And it is not for a short period. It is really a long-term compounding, high quality, high growth that we are in. Typically, the critical parameters for value creation really come down to three. There are plenty more, but three are the most critical ones. The rate of growth, therefore a superior rate of growth is a magic. Even more important is the quality of the growth, which allows the conversion of the growth into returns in a much more felicitous way, in a much more productive way. And therefore, when investment returns on a long term materially exceed that of the underlying growth, that usually happens because of the quality of growth. And vice versa, when investment returns for a business are below the growth rate or much below the growth rate, invariably the root cause is the poor quality of the growth. And the third factor is the margin of safety, which means price today in the context of the judged or conjectured value of that particular business today. I think on all the three fronts, I can't imagine at any other point of time the way India is poised today. Growth rate is going to be not short or small. It is going to be large and long, and more importantly, predictable, sustainable, solid, so that it is more value creating. Secondly, quality of growth is the biggest change that has happened in the context of the country. For the year of 2020 to 23, in all probability, the return on equity number for Indian markets, Indian listed businesses, probably will be the highest in the world. And this is for the first time that this has been attained. If it is not the highest, it will be very, very close to what US return on equity number would be. Return on equity is a holy grail of a great outcome to be obtained. And I think qualitative terms, India has come a long way where right at the top, Indian return on equity or the quality of the growth, right at the apex position. And therefore, that is a huge change which has occurred. And all that has occurred in the backdrop of a very difficult COVID period. So it is even more commendable. And it has also been attained in the context of reduced leveraging on the balance sheet of the businesses, as well as in the balance sheets of the lenders. And therefore, again, it is a fantastic outcome to be had. Therefore, qualitatively, I think the most distinguished phase of the market performance and value creation by businesses actually will come from the quality of the growth. The third, margin of safety. A lot of time, people keep thinking that markets are at a new high, and therefore markets may have run up ahead of the time. I beg to differ. I believe markets are reasonably priced. I do not detect any signs of any frothiness or unreasonableness in the markets in general in entirety. There can always be pockets of valuation mismatch, especially I keep hearing that in mid caps and small caps, maybe there are issues where some things may be running a bit ahead of the time. But even there, to be sure, it's a very general statement I'm making. Really speaking, valuation we can talk meaningfully only in the context of a particular business and not in general. But even if I have to hazard a guess on that, I would say, even as far as mid caps and small caps are concerned, barring some noticeable aberrations, I don't see some terrible frothiness or anything of that kind. They are nicely priced in most cases, but not indecently priced or outrageously priced. And therefore, there are no signs of excesses or outrageous behavior or frothiness that I can at least detect. Therefore, three important conditions: good highway of the growth ahead of you for a long period of time. Second, superior quality of the growth. And third, valuation, either attractive or reasonableness. And I would dare say today we have all the three conditions in place. And therefore, as I've iterated and reiterated many times, but in the phase ahead of compounding is not a short period of some 3 years or 5 years. It is more like 10 years and 15 years and 20 years and more. This is the opportunity that perhaps comes once in a lifetime. And I believe it is the long term compounding opportunity which creates the magic. And I think not only we'll have superior growth ahead, but outstanding quality of the growth. And durable for a long period of time, while valuations are fair and in many cases actually reasonable, barring some pockets where there is some level of little more enthusiasm, but nothing overall which is outrageous or shocking or so misaligned that reversals can be sharp and terrible. None of those conditions, at least in the valuations that I can detect. Therefore, this is a perfect 3S kind of a situation to have. Uh, any such long term opportunity is not going to be free from volatility on a shorter term basis. Time to time, there'll be volatility, violence, upheavals. At times, it will be relatively shallow kind of volatility. At other times, there may be violence. But through that volatility or violence, I think the picture ahead is one of the most defining parts. And therefore, that is where I would end. That this is not a time to judge, or this is not a time to suffer from undue skepticism. This is not a time to suffer from self doubts all the time. And this is not a time to get, worked up by trees and miss the woods. This is a gigantic, long term, outstanding, value creating at a large scale of a compounding variety opportunity. And I think those kind of opportunities, small issues or small concerns and worries really are often the reasons why it can get missed out. And therefore, the biggest error to make will be to get unduly skeptical or to get disengaged. Some level of skepticism is always a necessary attribute in investing, but unhealthy or unfounded skepticism actually can derail the journey. And therefore, I would just end saying that this is going to be one defining journey of decades ahead in terms of the greatest value creation unfolding before us.
Thank you, Bharat. In fact, I would like our investors and partners to have read the recent interview which Bharat did with Value Insight. My colleagues would have shared with you, or even read through the Bharat thoughts on the golden decade of India. He wrote in March 2018 in Economic Times paper, which something alludes to similar what he said right now. So Bharat, I'll jump into the questions straight away. And as I read, 3-4 people, Mr. Ashish Kumar, Mr. Mahesh Kalkar, and Madam Rupan Jani is our customer. And I'll just read, she requested to please, as an investor, raise this question to you that, Bharata, you added Interglobe at a very higher price, and crude oil seems to be at a very uncertain moving upwards. So, what are your thoughts? And each of them have said that how will aviation sector do well, and how will Indigo create wealth at such a high price? That's the question for them.
Well, whether Interglobe is at a very cheap price, not really. But whether it is a high price is certainly matter of some debate. Actually, we had Interglobe Aviation in the portfolio a few years back at a much cheaper price than this, at more like 650, 700. But unfortunately, that time it didn't work well for us. We suffered a difficult phase of interglobe aviation, and as sometimes it is, when it was to be, when we got exhausted by it, that was the time when actually Interglobe really began to show the performance, and we unfortunately missed out and we vacated that turf at that time. I hope it is not the same this time. But just to put numbers, uh, the current year, in all probability, they should report somewhere in the vicinity of 4,500 crore of net profit. So it's at about roughly about 20 times in the current year. The next year, there is a fair probability, 24, 25, that earnings may be little lower than in 23, 24, not because business demand has suffered or their efficiency has gone down, or because the ATA prices have gone up or something like that, and therefore that is hurting the performance. None of those. The explanation is very simple. You might be familiar that Pratt& and Whitney, which is the supplier of the most important part, which is the engines, the locomotive for an airplane, they've had a lot of issues. The quality of the engines has suffered. The problem was in terms of the metal coating issue, but I'll not get into technical details. That issue resulted in many of the engines not fulfilling the life expected out of those engines. And therefore, there has been a recall which will keep going on for at least next about 1.5 odd years. And therefore, you might have read many of the aircrafts have been grounded exactly at a point of time when demand is the highest ever in the history of aviation. So it's a bit unfortunate where capacity constraint has come at a point of time when demand is extremely robust and it is rising month after month, but there is not enough capacity to fulfill. The Pratt& and Whitney obviously is required to compensate this. And roughly, I think about 500 odd million dollars of compensation that Pratt& and Whitney is required to give to Indigo or Interglobe Aviation. That would be spread out over a 2.5 year time. Therefore, there'll be some benefit in the current year, small one. Next year will be larger one, and the highest will be in the 25, 26. So some 4,200 odd crore of benefit or compensation that will come from Pratt& and Whitney because of this issue. So unfortunately, there is a capacity constraint. Otherwise, the business is in a very robust shape. Interglobe is expanding the market leadership. The share where it is already dominant, and in that dominant position, their market share is rising, almost touching close to 60%. The second part of the journey that Interglobe is working very well is on the international part, and it is route by route, it is building up. It remains probably the most efficient airline in the world today. And barring these issue of the barring the issue of these capacity constraint, Interglobe actually is in a most advantageous position to benefit highest from this. And in a business of high capital intensity and where capacity has to be upfront while demand has to be filled out on a daily basis, it's always a very challenging business to work upon. There is probably no other airline in the world today which runs that equation as efficiently as Indigo does. So, sorry. Uh, Therefore, Indigo is poised to benefit in a huge way from the expansion of opportunity ahead. But in the interim period of about a year and a half or so, it will experience a bit of a bump. Meanwhile, capital efficiency, expansion of the capacity, You might have read sometime back it placed one of the biggest aviation orders in the history, and strategically international market as well as consolidation in the domestic market. Many of the levers with a cash-rich balance sheet, which is a rarity in an airline, where balance sheet is strong and healthy with cash on hand. I think on a long-term basis, it is, in our opinion, with some cyclicality risk and all that, is still a very healthy opportunity to be participating in. But we are watching. This is a cyclical. There are cyclical elements in the business, as we saw during the COVID time. Who thought about it that such a thing would happen? But they've lived through that and they've emerged stronger. They've shown themselves to be the best airline in the world. So more reasons to be optimistic than negative. And on the current year numbers, I think it is roughly priced about 20 times, which is not earth-shatteringly cheap, but it is not unreasonably expensive either.
Thank you, Bharat. And I think Indigo and Indian aviation market has reached to a kind of a duopoly stage, and maybe the way Indigo's market share of closer to 60% suggests it kind of a monopoly business. Because 60% market share is a significant market share to have. Mr. Kunal Manek is the existing investor of IP, and he has written, "Good evening, sir. I've been with the for last 2 years. The returns have been lower single digit. Index has been a higher single digit the last 2 years. Your thoughts on how are we going to make sure that we deliver on a long-term performance? What could be my 5-year returns be, and why thoughts we lagged over the last 2 years? In entrepreneurs, his question on entrepreneurs is there, how entrepreneurs have done, and what should be the outcome 5 years from now.
First of all, certainly the 2 years have not been particularly kind. But if we narrow it down, really it is the year of 2022 which has been tough. And because relative sufferance was higher in 2022, even though 2023, the financial year 23-24, if you see in the first 6 months, the portfolios have done decently well and have been ahead of the benchmarks, typically at a higher end. But given the sufferance the previous year produced, the 2 year combined, I understand may not look all that gloating or satisfying. I would only say this thing, that there are, and I'm repeating perhaps to many of you, there are two returns that we are seeking at every point of time, and in the order in which I'm saying. There is absolute and there is relative. To me, the purity of investing is all about absolute. That on an absolute basis, we have to generate positive, compounding, healthy, long-term outcome, irrespective of what is the behavior of Mr. Market, irrespective of the reference to Mr. Market. I believe the key and the most important investment objective for any investor, for the money of the others being managed, is to generate an absolute return, positive, healthy, compounding type over any meaningful period of time. Second, the world looks at a relative, because that's how the world operates, and may or may not always be the best way to measure relative differences amongst people. But I understand that relative is a way the world is going to look compared to indices, compared to others, or whatever, or in a time frame, etc., etc. That relative superiority is also something I believe we have to be committed to. Therefore, there are two commitments we have. over any meaningful period of time, we will produce absolute positive, healthy outcomes, irrespective, without making any context or excuse of Mr. Market and Mr. Market's behavior. Second, not only while the prime objective is absolute, over a period of time, superior relative returns is also something that we are duty bound to generate. And I believe what we do on a longer term basis has to achieve that. Therefore, satisfying absolute and relative superior both are objectives to which we remain forever committed to. All that is required is a meaningful period of time, and therefore there can be odd period where that may not be fully in evidence, and at times a particular period's performance affects a period when you combine it with the preceding period of some time or even succeeding period of some time, an overall outlook may look a little offish. But we remain fundamentally and totally committed to the satisfying absolute and healthy relative over a period of time. And both, not only it is possible to achieve, I believe it is our duty to achieve. And if we, over a meaningful period of time, we fail to achieve that, the blame has to be on us, not on Mr. Market, not on anything else. It will have to be us. And I remain fully committed to and accountable that both these objectives, like we have done it over 22 years so far, our oldest strategy is indeed 22 years old, we remain committed to. Uh, Lastly, if you look at any of our strategies over a 10-year period, there are five of the strategies which have completed a period of 10 years and more. The youngest out of the 10-year plus strategies vintage is about 13 years old, 14th about to be completed. And the oldest strategy is about 22 years. Each of the each of the 5 10-year plus vintage strategies from our end has produced compounded returns exceeding between the range of 16 and a half to close to 19.5% over that time frame. And alpha for each of these strategies, that is the difference of the returns compared to the benchmark, has varied from 3% to all the way to 6% per annum over respective durations. So we acknowledge 2022 has been less satisfying, rather dissatisfying from our point of view too. We are cognizant of that. We have done a few things that we have to do, but many more things are in the offing, which is slowly being built into the portfolios. But we can't rush into it because undue haste can be a problem, and we do not want to do that. And finally, I would say the while 2022 has been a challenging one, I'm at least happy to report to all of you that we have not violated any discipline. We have not flirted with our philosophy, and we have not, while there can always be some mistakes and some misouts, but there are no blunders. We have not done anything which can make us feel embarrassed about, or where it will look completely offish. Therefore, we have remained disciplined. We have remained students of the philosophy that more than 3 centuries of investing has shown to be valid. And we are vigilant, we are agile. At the same time, we do not want to do things in a short-termish way, which can actually create a longer issue. Not, at least happy to say, there are no blunders philosophically or in selection in any of the things that we have done. Therefore, while 2022 has been chastening, we remain in a positive way, optimistic and positive. And I would dare say, as I mentioned at the beginning, the period ahead will reflect and it will cover the gap of the past as well. For those of you who have been around with us only for relatively shorter period of 2 years or thereabouts or 3 years, it will not only cover that gap that you might have witnessed for this period, and not only that gap will be covered, but the positive gap that we have enjoyed, as I mentioned about our various strategies, that also will come in the offing. And therefore, we are, while it is easy to feel chastened, but we are ebullient and positive about where things are.
Yeah, so that's very assuring, Bharat Bhai. Now, the two clients, client Amit Gupta and Karthik Reddy, and some anonymous attendee, your answer could be similar, but their question is there has been a recent rally in the mid caps. We've been investing into EOF1 and EOF2, and also EOP. Why has that, and what are your thoughts on that portfolio? Why is it not caught up? What's your thought ahead?
It's a very solid portfolio, I must say that. But at the same time, we are mindful of the risks. Mid caps, small caps, they are alluring beauties. There are times when they look the most beautiful damsels in the world. There are other times then you discover the wicked charm. And therefore, we have to be mindful of the risk as well. Returns is a very important objective, but managing risk is equally important. When you are in a phase where when you seemingly look like more focus on risk control, it may make you look boring and less attractive. That is the phase that we are going through. But mind you, we have not lost sight. We are fully aware. We are fully cognizant. And if we are looking little boring, probably that is based on the purpose and it is not out of the slip of the mind. And therefore, I would urge your attention and request your patience that investing is never about only returns. It is never about the highest, but about the optimal ones. It is not about the quickest, but it is about enduring healthy outcome for a long period of time. And it is not about getting returns anyhow. It is getting returns through a disciplined process so that it becomes replicable over a long period of time. Therefore, investing is not at times a hit and run short term game, which at times may look very attractive and may look very overpowering. But more you fall for the charm of that game, chances are far greater mistakes can be lying ahead. And we are, as I mentioned, boring as we may look at times, but it is on purpose and with a clarity that we must remain mindful of the risk and we can't fall for the trap of losing eyesight of the risk while ensuring healthy outcomes uh, in terms of absolute as well as superior relative over a period of time. Uh, I'll give you an example. In 2017 or 18, I can't recollect, maybe 17, was a period where mid caps were flying high and beyond, I mean, and relative fundamentals of the market, of the economy, were not comparably strong as they are today. And yet, many of them were looking far more expensive than they are, some of them will look today. And And that was a period when they work like charm, and they gave phenomenal outcomes in a shorter period. But when the reversal came after the first few months of 2018, it was ferocious and it was brutal. And therefore, not only a lot of people evaporated the gains of 17, but they actually suffered negative outcomes thereafter. And I'm not necessarily suggesting that such a thing is in offing. I think valuations are healthy, but not unreasonable. Therefore, at least meritoriously, there are no reasons for sharp drawdowns in the market. But at the same time, we have to be mindful that we cannot take unreasonable chances or chances where margin of safety is lower or where risk reward doesn't look optimal. It is just that. But at the same time, we remain deeply skeptical of what we ourselves do. Our mindset typically is what we do not have, why we should not have. And our mindset equally on the opposite side is what we have, why should we have, and why should we not get rid of it? Is the typical skepticism with which we approach. We are vigilant, we are watching. Some appropriate changes where we felt we were slow or we made some mistakes, we have recognized and corrected. Some more are in offering, which have been built in the portfolio, which has been built into our framework and comprehension. At some stage, you will see some more changes there too. But overall, as I mentioned earlier, I remain, while this may not look the most gratifying outcome over last couple of years, I'll still repeat, I remain ebullient and very positive, and we remain committed to both healthy absolute and superior relative, and both will be attained in the even in emerging opportunity portfolio. Portfolio quality, names, position sizes, overall character of the portfolio, risk reward balance, as much as we see, is quite nicely aligned and in a very decently healthy shape.
Great. So clients, I'm not asking other portfolio question because Bharat Bhai has covered the philosophy, the character, the strength of the portfolio, and it holds true for all that. This is the fifth question on Geo Financial. So let me put that as Mr. Sunit Sood has put it and Mr. Dipen Javeri, but Sunit Sood has put in there that, how Geo has disrupted in the telecom sector. Will Geo, you have a great weight in a lot of weights in NBFC. Will Geo be a disruptor in the NBFC business, and how will Bajaj Finance and Cholamandalam play out with Geo entry?
Just that you ask, Bajaj Finance today touched lifetime new high with a little bit of flourish by going up in a nice, I don't know the exact price, but some 4% or thereabouts, comfortably touching lifetime new high. So that is just a little bit of addendum to the question that you have asked. Geo certainly has disrupted telecom in a major way. Uh, but if you reflect and think about it, when Geo came, the telecom, about 8 or 9 years back, the battlefield lines were drawn. Geo disrupted with a new strategy. Most of the existing players were still struggling even before Geo came in. They were saddled with high license charges. They didn't have a great balance sheet with a lot of borrowing on the balance sheet. There were a lot of AGR dues which still needed to be cleared to the government of India. And there were just too many players and nobody really making any meaningful money. And therefore, it looked like a perfect, death wish kind of a situation for most of the telecom players, where everyone competes in a very aggressive manner and no one really has a strength. Each one is wounded and no one really makes any meaningful money. And even after the battle is over, it was not very clear will anybody really be able to get up and walk back in a reasonable health without staggering. In that situation, Geo came and expanded the misery of many players by making voice free, bundling data along with it, and providing data in abundance, and which was the right thing to do. And therefore, it was a big lesson for everybody, all the incumbents. But you know what? Actually, that has made Bharti stronger. And Bharti today is a much, much stronger and better company in every single aspect you can think of. The balance sheet, the quality of the offering, the quality of the marketing connect, the ability to take out costs and consistently build the solution, which is world class. I must point out that Indian telecom entities, both Jio and Bharti, are probably the two most efficient world-class telecom companies, the two probably the best telecom companies in the world today. And all that we are seeing today is more really from voice and data. 5G will expand in a big way the B2B or the business opportunity more than the consumer. 5G will be a huge opportunity from a business perspective and industrial manufacturing, health, education, business, cloud adoption related opportunity, and scaling up the small, mid, or large enterprises with that technology. These benefits are yet to be seen and will come. Therefore, while Geo is a ferociously competitive player, the entry of Geo actually has benefited Bharti, and Bharti has become world-class, strong company, and in a way, they must remain thankful to Geo too for that. I would say, while initially it was more misery for every incumbent player, including Bharti, became more challenging, and every day probably must have looked very difficult for all the players, including to Bharti. But today, actually, Bharti must remain thankful to Geo for all that has happened because it has really made Bharti come into its own. On Geo Finance, the business model as yet has not been unveiled. So all the business model conjectures are hearsay and really is a work in progress. Essentially, whatever is somewhat in the public domain is that Geo has a very strong telecom proposition. So a lot of customer base, some 40 to 43 crore customers. GeoMart, the retail arm, again is a large base of the customers, and therefore both of these businesses offer rich data about customers, their behavior, their pattern, and the pattern of consumption on these two important parameters. NGO is a technology to convert the data into a rich data which can benefit the lending decision and a business enabler. So these are some formidable advantages to have. And therefore, geofinance, once it is able to build the business model well and is able to integrate with a technology so as to offer a scaled solution at a low cost, a low credit cost, and efficient dispersal of the loan, they definitely have a good advantage that they have. But it is not a question of this or that. Geo finance, assuming it will do well, doesn't mean others will do. Others have a reason to feel worried or a reason for others not to gain. Secondly, as I said, any good player actually expands the industry. And therefore, a high quality player like Bajaj Finance, for example, may may want to borrow a trick or two from somebody. At the same time, I'm sure Bajaj Finance will teach a few tricks of its own to the industry, and therefore healthy, agile, high quality player like Bajaj Finance, I would say is actually will gain out of this rather than have any reasons to worry. Thirdly, India is underlent, underfunded at all levels. Whether we talk of agriculture side, whether you talk of small businesses or mid-sized businesses, whether you talk of infrastructure funding, whether you talk about consumer funding, whether you talk of business capital for working capital and the lending for that, whether you talk of professionals needing lending solution, whether you need lifestyle related lending, many of the opportunities are hugely underpenetrated. In a growing economy, in a rapidly growing economy, in an economy which is already very conservative, when people in general, businesses and consumers both are conservative, and therefore leveraging in the society is much lower than what normally is. And with a growth of economy, I still believe a long-term growth rate of the lending opportunity will be well over 15%, and high quality players will do remarkably better than that 14-15% kind of lending opportunity. And not just one, but several new large players can come in, and yet I think industry need and demand still can't really be fulfilled in the envisaged long period of even 5, 7, 8 years, in my opinion. Therefore, good player coming in will all be to the advantage. But equally, geofinance also will have to establish the model and show the business case that that model will work. It will work to the advantage, and it will create a very profitable value creating outcome for them. So we await all the unveiling of the business model. We await the plan, and thereafter also it will take a few years for the execution to be reflected, and time will tell how that all goes. But short answer, I would say this is a happy thing to have rather than a point of worry.
Client Mr. K.S. Gopalakrishnan has put a question. He's an investor in IEP. He says he has observed that over the last many months, you have increased the weightage in the pharma portfolio. It is now the third stock ready. So, what are your thoughts in increasing your weights in the pharmaceutical sector?
Weight has not gone up unduly much. It is still overall single digit weight. Really speaking, the pharma represents three important opportunities. Other opportunities in pharma are uncertain or less meaningful. But the three most important ones are: A, domestic opportunity, where there is a steady, longer term growth, a high quality growth, but not very high growth. The industry has been growing at a rate of about 10-11%. And for a meaningful period of time, as the income grows rapidly and the health standards grow, as society evolves, I think it's reasonable to assume that 10-12% kind of long term growth in the domestic market is reasonably easy to see. The second is what somebody like Divi's does, which is to address innovation engine of the innovator. So innovator defines the target or defines the path, but it takes the help of somebody like Divi's with a strong capability in chemistry and a strong ability to develop its own path to that innovation, all for the client, not for itself, by selling directly solution in the market. So it will always supply to a client who in turn will sell in the final market. So no conflict with the client. And they also need a player like these who not only will do great contractual research, which is proprietary to that particular client, but also will be able to, when it reaches a meaningful position, that it will produce for itself at a scale. Divi's is an ideal company in that space to serve that. Last few months have not been particularly helpful for them, for reason that major opportunity in COVID, what they did for a drug called molnupiravir on behalf of Pfizer, that with the COVID receding, that large and very profitable opportunity suddenly went out of their hands. And therefore, their numbers in comparison looked weaker. They also suffered some supply chain dislocations and a bit of the raw material price related inflation in between, and some challenge at the client end as well, because the end customers in America and Europe have been going through their own challenges. And therefore, some base business of theirs suffered. Therefore, last 2-3 quarters have not been particularly heartwarming for Divis, but they run a very powerful, very strong, well proven long term business model, which is, in my opinion, all weather kind of a business model to have. The third large opportunity is American market, which traditionally has been a great opportunity because it is a large market. Secondly, it pays a lot for innovation. And thirdly, even for non-innovative products, American markets pricing points have been far more favorable at a scale, and therefore very profitable market to address. Over a period of time, it has suffered challenges in terms of pricing pressures, bit more of political pressure in America to reduce the pharmaceutical prices, and regulatory oversweep that has occurred in America. Thirdly, some of the rich pipeline in America also has hit a bit of a bump in recent times. Therefore, American market is no longer as attractive as it was at one point of time, but it still remains a substantial market. Because of these challenges, a lot of players within India as well as outside have vacated the turf, because they couldn't really deal with the large cost outlay, but with uncertain business and eroding prices. So many Indian players, many international generic players also have vacated or materially reduced their America presence. Therefore, the ones which remain and which are strong, like Sun Pharma, for example, have a reasonably meaningful chance to do well. These are three important opportunities. Then there are other opportunities, some in Africa, some in other emerging market. Europe, in general, is a somewhat inferior market with poor pricing and really too many difficulties and challenges of working through several markets. Therefore, these three principal opportunities, I think, finally are settling down, and there is a meaningful long-term opportunity. The growth outcomes can be domestic market, 10-12% top line, bottom line maybe little higher, and with a solid growth on a large base, probably return outcomes can be even little larger. In America, the outcomes can become larger, but it is little more unpredictable, a little difficult to make a more meaningful longer term projection. So there is some level of risk. The way you seek to counter that risk is by focusing on specialty products, the way Sun Pharma is doing. That is the best way to deal with that market, but it also has a cost and other challenging implications, but still remains meaningful. And the DB's kind of model, even though shorter term challenges remain, but on a long term, it remains a healthy 15-20% growth kind of opportunity, with a possibility that profit outcomes can be even possibly higher. So it's a good strong opportunity business, and we have handpicked some of them and built into the portfolio. But we are
Great.
watching. That space needs watching. You're right about that.
Thank you. I hope Mr. Gopal Krishnan that and some of other people pharma question gets answered there. Mr. Sri Parveen Nanduri, if I spell it correctly, they said, why did we exit Kotak Bank? And they feel that it's too late. I mean, the question on Kotak Bank exit now.
Well, your criticism is valid. I agree. I completely agree. We probably could have taken that step little earlier. There was a only bit of a practical challenge. In the banking segment, there are no entrepreneurial banks. There are not too many. And therefore, we had uh, finance is almost 32% weight in the index. And Indian entrepreneurial portfolio cannot buy PSU banks. Most of the private banks are also out of the bound because these are not entrepreneurial ones. So it cannot buy HDFC Bank, it can't buy ICICI Bank or Axis Bank or SBI Bank or anything. There are only two entrepreneurial banks actually available today. Kotak and AU Bank, and therefore there was a bit of a dilemma. Kotak remains strong bank, well-run bank, well-governed bank, with very strong emphasis on the quality of book. At times may look more conservative than probably need be, but highly well-governed bank with entrepreneur driving that bank till now, and where the asset quality in general is squeaky clean and philosophically one doesn't have any concerns about that. Very important parameter in a lending business to look at. And given the paucity of opportunity, really there were only two bank names that we had, and therefore this has been part of the portfolio for a long period of time. Our earlier period portfolios have still made very healthy outcomes on Kotak Bank, but I admit my our portfolios which have come in last 2 3 years, they have not probably seen much returns out of investment in Kotak Bank. So finally, at some stage, we did decide on it and we exited. But your criticism is valid. I fully accept that.
As we move towards the end, there is a two questions which I now taking more macro because it's not more specific to any sector or stocks. One more question is there which you can answer. There's a recent entry of JSW Infra, and people have got to know if you want to share some thoughts. Though it is just started getting added, but it is the fifth question that's coming on there. That how come JSW is part of infra, part of the port?
Well,
Thoughts?
JSW is one of the most important ports in the country. I mean, network of ports. I think logistics and transport um, is going to be one of the biggest infra and unfolding opportunity in the country. As industry expands, as manufacturing grows, ports and the logistics will be among the biggest gainers. PLI is doing a lot to manufacturing, to spur the manufacturing. Digitization is helping that manufacturing strength of India enormously. And industry part is getting helped and aided by huge focus on the infrastructure, whether roads, whether airport, whether ports, whether railways. Also with a Gati Shakti project that government has unveiled, the national logistics policy, then industrial corridors like the Bombay Delhi Industrial Corridor, which is now finally, hopefully reaching to the completion. And I think that will be a very big spur to the industrial activity in a very efficient way. Finally, our concept of logistics is also dramatically altering. It is no longer port is a silo, or railways is a separate way of transporting, or roads is a separate way of transporting, or airways is a separate. They are all being combined together in a multimodal singular solution. And the digitization effort, and government gets the full credit for that, where all assets, whether airport, whether ports, whether roads, railways, are all digitally harmonized so that they become interconnected and become multimodal singular solution to impart greater efficiency, better customer satisfaction, and strong volume growth with improved profitability for the businesses. On the flip side, improved logistics will mean customers using that service is a very industrial and manufacturing customer wherever you think to gain from logistics revolution and improvement. And therefore, the opportunity on the port side fits in very well with this particular name. Uh, the Indigo comes on the from the airline point of view, B2C customer, but ports, I think, will have a huge role to play to spur the manufacturing and industrial revolution of this country, which hasn't happened for a long time. But with the PLI and government's deep focus on infrastructure, I think those are around the corner. JSW runs a very efficient port, network of ports with further plans to increase the depth and the strength of the ports. There are not too many really targets now left to buy over, and therefore the growth will have to occur in a more organic way. You might have seen Adani Port September numbers. The port volumes grew by 26% compared to last year, and the throughput of volume that they handled in the first 6 months is touch about 203 million tons, a record ever. I think as India becomes on an export and on more competitive, as manufacturing gets fillip, as industries expand and infrastructure grows, with GST formalization of all of these happening in a faster way, I think good logistics players like JSW Infra will gain immensely. And that is where the rationale to have it.
Lovely, thanks. Now combining Bharat by a lot of 8 to 10 questions on macro. It'll be quite khichdi, but the question has been what are the risks to Indian equities? Then somebody has put it in terms of there with assembly and general elections coming out there. Will there be a policy changes? Will be slow now? Adverse reactions. Some people on macro have put in terms of higher rates in the developed economies. So, will that be a risk slowdown in USA? So in short, the question is in terms of all this macro in the next 3 to 6 months will have a dent on Indian equities. Your thoughts around?
Yeah. As far as developed world interest rates are being high and probably getting higher, in a way, it's a good uppance, I would say. They are paying for the sins of their own. And I would not even call that mistakes. I would say these are sins. The developed world has been too complacent, too, I would say, arrogant actually, and ill behaved in many, many respects. And therefore, the root shock of high inflation as well as higher interest rate, then neither of these things they've been accustomed to for a long period of time. Whether America or Europe traditionally have enjoyed limited inflation, which is why these are called developed economies. And they've traditionally enjoyed low cost of capital, and therefore that has allowed value creation to be higher because the cost of capital that they have to use in businesses is low and meaningfully a big competitive advantage to have. I think over a period of time, they've abused their strength, they've misbehaved. During COVID, the focus was on throwing free money in the hands of people, politically convenient for America and Europe and Japan and China and others to do, but not very healthy, economic, sensible, rational economic decision. And therefore, after throwing hundreds of billions of dollars and euros, almost running over trillion during this period, when the war occurred, they were caught napping. Supply chains got into a problem. In many cases, disrupted. Oil price, energy, they got exposed to because of the lack of availability of the Russian energy supply to Europe, especially. And many other problems came roaring, and therefore inflation soared unimaginable high double-digit inflation, which Western world, I can't recollect when they've last seen it. Probably at the time of war and not decades back. No other time they've seen this kind of thing. And I think that lazy attitude to keep cheapening the cost of capital in Europe, almost coming to negative interest rate, in America coming close to zero. I think these were very poor quality economic decisions, almost I would say bordering on arrogance. And therefore, they have to go through that challenge. And I don't think anybody needs to have any sympathy for them. The problem was that their high interest rates or otherwise became the world's problem most of the time. In the past, that always became a problem for the rest of the world. It still is not entirely removed away. The world still has to observe what Fed is doing and their own problems, they try to transfer it to the others by currency appreciation or capital flows, and therefore America selfishly does try to gain out of their own sins by transferring the problem to the outside world. But world also has changed, and especially well-governed countries are beginning to show the way. And I would say India has behaved admirably during COVID time. Instead of throwing money and buying cheap popularity, politically that would have been convenient, but India remained firmly on the path of reforms. Instead of throwing cheap money, it really enabled supply side reforms during that time. Very, very clever thing to do. In hindsight, it looks almost the most important thing to do, but that is in hindsight. At that time, if you see, it was very difficult to take those steps. At that time, it was pressure was to give help and support to businesses and people by throwing money rather than carrying out reforms which will pay over a period of time. Therefore, India has done what it has to do. And therefore, America's issue, Europe's issue, are no longer the same issue for India as it automatically would have been if Indian situation were weak, like it was for a length of time prior to this. And therefore, there is no automatic parallel of American interest rate and therefore impact on Indian markets or Indian interest rate. You have seen that RBI has not raised any interest rate today. That inflation guidance also remains within the band. And India's real interest rates still, though the cost of capital has declined overall, India's real interest rates are still positive, while developed world interest rates are still in a negative territory, real interest rates. Therefore, I would say probably developed world is something to learn from well-governed financial management the way India has handled. And therefore, no surprise that why Dr. Shaktikant Dasa has been ranked the best central banker of the world. So, in the past, like they would somewhat mechanically say, if America sneezes, then the rest of the world will have flu. Maybe at one point of time that had some validity, but today I think that should induce a yawn rather than like a homily or a truth. So, short answer, American interest rate, European interest rate, pressure on that. I don't think automatically, like in the past, it becomes a problem for India. It may possibly affect capital flows to some extent from the developed world, from US and Europe to India in some way. But even there, I think they don't have too many options. Ultimately, if this country is going to grow and going to create on a large base significant value creation, that capital has to come to India. And therefore, I do not see that as a big worry. Elections, whether can lead to any policy changes in the time of elections, I don't think so. And this government has shown very, very clearly that at no point of time whether any central elections or any important state elections, whether government has tried to do populist things and have tried to do things which are out of the character, that is not the record. The record has been that of fiscal rectitude, fiscal discipline, and in fact, fiscal boldness, even during the reform time, even during the election time, the government has displayed courage to take difficult steps. Demonetization occurred in November 16. And please remember, in the first 3 months of 2017, I think 4 or 5 major state elections happened, and including Uttar Pradesh and Gujarat. And yet, government had courage to take a step like demonetization in November 16. So short answer, given by the record, given by constant attention to fiscal discipline and rectitude, even the first 6 months fiscal numbers, tax collection and expenses and deficits show that there is nothing which has changed in terms of what government budgeted and what government thought about. Risk about whether there can be any change of policy because of the elections around the corner. Well, I would definitely say leadership is very vital idea, and leadership is important everywhere. Leadership of a family, leadership of a firm, leadership of a society or a community, or leadership of the country. Leadership is a very vital idea, and you cannot generalize that irrespective of anything, the country will do well. At times I hear that irrespective of anything, India will grow at least 5.5%. I am skeptical of such a thought process. I don't think there is anything automatic about the growth rate of a country. It is the policies, it is the discipline, it is the vision, and it is the leadership execution which defines outcomes for a country. During pandemic time, what we did, we owe it to the leadership. And during the pandemic time, what Europe and America did, owed it to their leadership and the subsequent problems. Therefore, I would say leadership is a vital idea. This government has displayed a great amount of commitment to significant economic reforms, some very, very difficult economic reforms, and some politically very challenging decisions to take, and yet it has displayed courage to take those steps. Uh, that is vital. We have achieved a lot in these last 19 years. But I think we still, given where we are poised and given what we want to achieve and what is due to this country, I think a few more years of the same discipline, same ethos, same hard work, same vision is important to achieve. If there is any change in that, then we have to rethink the thesis and we have to rethink the outlook for the future. So, on that part, I agree. Leadership is vital, and if there is any change in the leadership of the country in any way which can take away from the current ethos and thinking, certainly it is a new point to be evaluated and to be built into the investment calculation. And to that the judgment on the future also will need to be revised. But time will tell. We have to wait and see. In about 8 months' time, we'll figure out.
Now, then maybe I'll take the last question, and this very question which a customer has written. He asked you, and I'm reading exactly. Honestly, tell us what you think were the mistakes from 2002 in performance, so we know that they aren't repeated. He's saying we have a lot of faith, and is there, I mean, surely learnings or something we can be reassured that this may not be repeated, and we get back.
I'll answer specifically and philosophically both. Mistakes would happen, and mistakes, I would, without sounding, making it trivial, would occur. But blunders are not acceptable. One-off still can occur, but repeated blunders is simply not acceptable. I'm happy to say, not just today or in the past, um, very honest appraisal if I have to make, but admittedly, I'll be biased when I'm evaluating our own sales. But we rarely can be accused of blunders. Mistakes, yes, certainly, some mistakes would occur. And at times we may make a greater share of mistakes than we normally do. Or some turn out to be mistakes, even though they did not look that way at the time when the decisions were made. Secondly, mistakes can be mistakes of omission and mistakes of commission. The mistakes of commission are, I would say, far more hurtful. Mistakes of omission are likely to occur, but mistakes of omission are not as grievous as mistakes of commission. Mistakes of commission occur when we set aside philosophy and do things that we shouldn't be doing, and yet hoping to gain out of it. Those are mistakes of commission. And when we commit those mistakes of commission, we have nobody to blame except ourselves. And to that extent, again, I'm happy to say mistakes of commission rarely have occurred at our end. Some would occur in any case in a long journey, but knowingly committing a mistake of commission has not happened at our end. Thirdly, even within the mistakes of omission, there are times when you may make more than usual. Like I would say in 2022, I think we had more than our usual share of mistakes of omission. And to that extent, I would say any criticism made that some names we missed out, some others we may have missed out. In IP, for example, PSU businesses we simply can't buy, and PSUs have been a great performer for 2022 and even for 2023 so far. In Indian entrepreneurial portfolio, we can't buy by the nature of the portfolio. But in other portfolios, we could have bought at least in a meaningful percentage, and we have not. We have observed it. We have also recognized that there are deep changes in the way public sector businesses are also getting altered. The governance, the freedom that government is given to these businesses, and the qualitative changes which are occurring, plus Atmanirbhar program of government, which is enabling a lot of PSUs to do very well, and the way government and RBI cleaned up a very tough decision to clean up the banks, PSU banks. It was a painful 3 year period over which the cleanup occurred, 19, 20, and 21. But without that very painful phase, public sector banks wouldn't have been healthy the way they are today. In fact, the banking sector in India, one can validly argue, probably is the best in the world today in terms of asset quality, strength, and all of that. So these some of these businesses we could have built into our portfolios in a greater percentage, more number of names than we have done. And I recognize that we have been relatively later in recognizing that opportunity. The previous 8 year period, just offering a kind of a defense at the same time, when I'm admitting that there has been a miss at our end in recognizing it earlier. If you look at PSU as a category prior to 2022, and if you take 8 years put together, the PSU as a category actually made losses, negative returns, 8 years put together. So it is a very difficult pass, but 2022 and part of 23 has been a dream period. And to that extent, maybe our biases of the past came in the way, but it's a lesson well learned. So some amount of mistake of omission may occur, but I think we had a greater share of mistakes of omission in 23, in 22, than probably we should have. Fourth, I would say discipline. I mean, this is something which is very vital. Discipline may not be visible, it may not reflect immediately in numbers, but over a period of time it does. Therefore, discipline may look intangible in the short run, but discipline is tangible outcome in the long run. It reflects in numbers. The I would definitely and very categorically assert that we have never violated discipline. Knowingly, we have not wavered, we have not flipped for what may be fashionable, what may be convenient, even if we knew that it may not be right, but just because it is popular and fashionable and to get a quick advantage, we have never done that. I would equally say we have never violated philosophical tenets. Philosophy of investing, which has shown to be value creating for more than 3 centuries, who are we to argue against that philosophy which has stood the test of time of more than 3 centuries in the world? We have never violated that philosophical tenets either in a negligent or careless or cavalier way. So, well, some amount of more mistakes of omission than usual in 22. Happily, no really significant mistakes of commission, no violation of discipline, no violation of philosophy, and generally, final point I'll put, you see, we all suffer from biases. We all are human creatures. We have our biases, our prejudices, our likes, our dislikes. But in investment, personal prejudices and personal, biases often can be handicapped. We have to see the reality as it is rather than through the prism of our own biases. But if we see the reality through the prism of biases rather than reality as it is, we can make mistakes, and we can make big mistakes. We have avoided blunders. As I mentioned, we have had our own share of mistakes, but we have not made blunders. I would only say that when you recognize an opportunity on a longer term, no longer term opportunity even if something goes from 1 to 100 over a period of time, it doesn't go in a straight line up like that. Bajaj Finance, 14 years back, 2,500 crore market cap when we first entered. Today, the market cap of the firm actually is just a shade below 500,000 crores, 5 lakh crores. And we remain as excited about Bajaj Finance as we were 12 and 13 and 14 years back. But that expansion from 2.5 to 5 lakh crore and hopefully much more going ahead, 200 times in 14 years has not occurred in a straight line curve. It has occurred with lot of violence, up and down every single year in the 14 years. It has gone through high and low and a volatility which is unbelievable one. Many times the trick is not the best name to be identified and the best business to be bought at the best price. The greater trick is to discipline, to remain long term, to remain patient with a good business and impatient with a bad business. And that I think is very, very critical. Generally, on that front, we have done well. We've been very patient with good businesses, and equally, rarely we have tried to induct bad businesses. But if we have, then we have been we have showed a lot of annoyance and impatience with the bad businesses. I think that is something on which hopefully we should get a good score. So, philosophical answer with some examples. Net, even if it is a scorecard, if I have to put it myself, I would say deserves a healthy score. If 22 year and 14 year, 5 different strategies of vintage above 10 years is anything to go by, with absolute returns ranging from 16.5 to close to 20, little less than 20, compounded over 22 years, with a alpha ranging per annum compounded from almost 2.5, 3% per annum to 6%. Surely that cannot that has to play the stock selection has to play the role, discipline has to play the role, a sense of panache, intensity, displaying the character in crunch times, in challenging times. When pandemic came, February 2020, Bajaj Finance was at 4,800. In fact, it raised money at around that rate at that time. In 3 months' time, Bajaj Finance came down to 1,750, and a lot of people felt disheartened. Many sold away. Many never bought it again. In whatever way we might have done, but at least while going through that pain and volatility, we remain loyal. Hopefully, loyal in a right way, not in a foolish way. And PI industry, the same way. Page Industries, the same way. Cholamandalam Finance, the same way. If you look at Astral, again the same way. Asian Paints, again the same way. Bajaj Finserv, the same way. I can give you more names. All of these businesses we've owned for 10 years and more. Each stock has seen violent activity year after year after year. But through that violence, over a long run, they all have produced their own magic. And I think if we have got so many of them reasonably right in the place, then I think some of the points where I put the positive scorecard must be valid. And equally, the times when 2022, when we have seen some results which are less than gratifying, partly due to the externality, but also due to internality at our end where we need to blame. Also, that negative point also is there on the scorecard. Net, hopefully, a positive scorecard or a very healthy positive scorecard is my opinion. But you can dispute that for sure.
I think Bharat Bhai, the last message from a client says it all. It was an absolute pleasure to hear it from Bharat sir. Thank you so much. So that's sums up, the client has summed up for us. Really appreciate Bharat Bhai for your time. Like always, we'll connect with Bharat Bhai now in the next quarter. That would be in Jan 24. Like each quarter, what we do is, post the Q2 FY24 results, the individual portfolio managers will be giving an update on the portfolio performance and the results update. The details will be sent over an email. They should start sometime around post 15th of November. Request all of you to join and hear a more detailed update on each of those portfolios. Thank you all.
I'll just
I've,
put one last
yes,
message,
sir. Yeah,
Nimesh.
yeah.
Investing for us, and I hope you believe me when I'm saying this, is not merely a business. Of course, it's a business, but it is well beyond business. Investing, to my mind, is passion. It is dharma for me, and I see it as an unbounded duty towards people who trust us. And we do not take this responsibility lightly. I put myself as a trustee. I put my team as a trustee of your money, and that is the credo. That is the panache or intensity with which we view our duty. There are times when we make mistakes, but we are deeply passionate students of investing. Learning is something that is a very important part of investing. When ego becomes higher, learning reduces. Hopefully, we will keep always the ego in check and learning on the higher front. And that is what delights us. The wealth creation that happens, the income expansion that happens, all these are important objectives, but byproducts. For us, it's a passionate trusteeship responsibility that we need to discharge. And that is what motivates me all the time. That is what drives me. Really speaking, that is the only reason I remain as young as ever in my investing thinking, commitment, belief, and the time that I spend behind it. I hope you believe what I'm saying, but it is coming right from my core within.
We do, all of us believe, Bharat Bhai, including the internal stakeholders and external stakeholders. Thank you, friends, for joining us. Have a great weekend watching Asian Games, World Cup, and enjoy the festivals in this quarter before we meet Bharat Bhai again in Jan 24. Thank
Thank
you,
you.
Bharat Bhai.
All the very best to everybody. Thank you.